Where do you stand on rate cuts, and when does the first one come?
Okay, we think the first one is in November now. And really what everybody is going to be looking at is the messaging that's coming out and the summary of economic projections. So I think you're going to see the U.S. growth forecast come down to around 1.5%, but core PCE up to 2.6%. So that's kind of just sticking with the story we've been telling all year about inflation being sticky here.
But you're not sticking with it. You changed it.
Well, the sticky inflation part
we
have sort of been with, but a slowdown in growth is one where we do see that continuing into the second half of the year. Not a recession, but a slowdown in growth.
All right, I want to go back to our Fed survey. Results may be a bit more hawkish, but the real concerns among the 29 economists, strategists, and fund managers surveyed, they're actually more concerned on the dovish side, with 66% saying the Fed may actually be cutting too late.
Well, look, we see one Fed cut this year, and then it's really the messaging for 2025, 2026, where I really don't see a lot of changes. Now, I think the market had been getting way ahead of itself earlier in the year, and partly that's because financial conditions have just been so easy. But the key thing is the inflation numbers, and that's where we still see sticky inflation. Inflation really 0.33 for the next read, coming out to 3.6%. On an annual basis, close to where we started this year. So that's really the key thing that we're focused on here.
All right. I also want to ask you about Europe. We're talking a lot about the U.S. and, of course, the Fed meeting, but we saw the ECB cuts. And we also saw the parliamentary elections have a big impact on Europe. Has your view on Europe changed at all?
No, we are sticking with the forecast that there's still more cuts to come. We still have two more, which is, sort of on the higher side of what the market is expecting for the rest of the year. But there were surprises with the elections. It's France, the snap elections, that were the big surprise. We see the center-right and some of the far-right parties gaining more ground here. I don't think that changes the outlook over the medium term. The focus is still on the consumer confidence still isn't back, even though the PMI numbers are looking better.
All right. We're always talking about where you can invest. Right now, we're looking at where you invest ahead of this Fed meeting, or Fed decision, I should say, coming up tomorrow. You're liking commodities. Sounds like you like commodities no matter what we hear from the Fed. I do want to ask you, I'm looking at gold and copper. Those are two that you're very bullish on. Gold's up 12% this year. Copper's up 15%, both of them off their highs. Aren't all the gains here priced in? A lot of it's data centers, reshoring. Don't we already know this story? What else is going to push commodities higher?
Well, we have seen commodities weaken a bit over the last couple of days, and we think this actually is a good opportunity to buy the dip, even for Brent, where we think that you could come back more into the high 80s. But for commodities, the story is really a structural one. We see commodity stockpiling. We see greater demand from emerging markets for gold. We see that still the upside risks for oil demand are still there, particularly when you look at the summer inventory draws.
All right. It's not all about the Fed and everything else. I do also want to talk to you just about the market. Yesterday, we saw Apple decline just about 2%, NVIDIA up about 0.75%, and we hit fresh record highs. What does that tell you about the market? What does that tell you about investor sentiment?
Look, I think that financial conditions still remain very easy here, and so a lot of this trade that we have seen just to keep risk on, that's going to, I think, remain in place at least through the elections. Then we're going to have to see what the election outcomes are. We are seeing elections around the globe, just more focused now on the elections in Europe, but also in the emerging market space. So I think over the near term, through the summer, you still see a risk on trade.
We've seen some investor reaction to elections in Mexico and also India as well. I think the last question for you before we let you go, what about fixed income? Is this a good time to lock in these higher rates? Do you believe that we're on a path for rates to decline?
We have treasuries, 10-year treasuries, around 4.4%, so staying in this range right now. So we're neutral on duration here, but if you sort of go back to the levels that we were at just a couple of weeks ago, we would add here, but we are in the high for long camp, which is where we've been all year.
All right, so there is an alternative to stocks.
There is still an alternative to stocks.
And commodities.
And we still see in high-grade bonds these record flows that have been going in.